These reports will be closely watched for signs of economic growth or slowdown, influencing the dollar, equities, and interest rate expectations. Analysts are divided on gold's short-term outlook. Some remain bullish, eyeing 3,000 as the next target, while others warn of a potential correction due to the market being overvalued before it can continue this upward movement. Welcome to this market analysis session. I'm Isa Martinez, a trader and market analyst at xChief, bringing you an in-depth technical and fundamental breakdown of key financial markets. Today, we will analyze the US dollar index, the SP 500, Euro USD, and Bitcoin, examining their current trends and potential future movements. With ongoing economic shifts, central bank decisions, and geopolitical tensions shaping the financial landscape, it's crucial to stay informed and prepared. Let's dive into the charts and uncover key trading opportunities. We will start as always with the economic calendar, considering that the next hours that you are going to see are based on the New York session GMT -5. This week's economic calendar includes key events that could impact the markets. On Tuesday, President Trump is scheduled to speak at an unspecified time. His remarks could influence market sentiment, particularly if he addresses economic policies, tariffs, or monetary policy. On Wednesday at 1 p.m. Eastern, the Federal Reserve will release the FOMC meeting minutes, providing insights into the central bank's latest discussions on interest rates and economic conditions. Traders will analyze this report to gauge the Fed's stance on inflation and potential rate cuts. On Thursday at 7:30 a.m. Eastern, the unemployment claims report will be released. This weekly report tracks the number of people filing for unemployment benefits for the first time. A higher than expected number could signal labor market weakness, while a lower figure would indicate strength in employment. Friday brings a series of PMI reports that measure economic activity in both the manufacturing and services sectors. At 2:15 a.m. Eastern, France's flash manufacturing PMI and flash services PMI will be released, followed by Germany's at 2:30 a.m. These reports provide early indicators of business condition in Europe. At 8:45 a.m. Eastern, the US flash manufacturing PMI and flash services PMI will be published. A reading above 50 indicates expansion, while below 50 suggests contraction. These reports will be closely watched for signs of economic growth or slowdown, influencing the dollar, equities, and interest rate expectations. With these high-impact events, expect volatility in the markets, especially around key speeches and economic data releases. Traders should stay alert as market sentiment shifts based on these fundamentals. Now we will continue with the most important fundamentals of the week. The gold market experienced a highly volatile week, driven by inflation data, congressional testimony, tariff threats, and geopolitical tensions. Gold started the week at 2,863 and surged to a high of 2,940 on Monday night, with 2,900 level acting as a key support. Throughout the week, Jerome Powell's testimony before Congress and inflation reports triggered sharp price movements, with gold reacting strongly to each event. Thursday, a higher than expected PPI report kept gold steady around $2,390, but on Friday, disappointing retail sales data led to a sharp drop to 2,886, where it remained until the session closed. Analysts are divided on gold's short-term outlook. Some remain bullish, eyeing 3,000 as the next target, while others warn of a potential correction due to the market being overvalued. Geopolitical uncertainty, monetary policy, and the recent relocation of gold reserves to the US have been key drivers of demand for the metal as a safe haven. Some experts even predict prices could reach $4,000 in the future if current conditions persist. Kitco surveys showed moderate optimism among analysts and retail traders, with 71% of experts expecting gold to continue its upward trend, though some anticipate potential pullbacks in the coming weeks. Looking ahead, with the US market closed for President's Day, lower trading volume is expected, but key events such as the Fed's meeting minutes, employment data and PMIs will still be crucial factors to watch. In other news, Bitcoin fell to $96,000 following Federal Reserve Chairman Jerome Powell's testimony before Congress. Powell reiterated that the Fed is in no hurry to cut interest rates as inflation remains above the 2% target. His comments came after Senator Elizabeth Warren urged him to lower rates quickly to support economic growth. Powell emphasized that while rate cuts are on the table, moving too fast could undermine inflation control, and moving too slowly could hurt economic activity and employment. The Fed kept interest rates unchanged at 4.5% last month after 3 cuts in 2024. Current projections suggest 2 rate cuts in 2025, but rates remain historically high. Powell's cautious stance weighed on Bitcoin and the broader crypto market, which reacted with a decline due to the negative impact on high interest rates on risk assets. Despite the drop, Bitcoin and major US stocks remains within a wide consolidation range after hitting all-time highs 3 weeks ago when Donald Trump took office. Market expectations remain that Trump may pressure Powell to lower rates, which could benefit risk assets. And now we will continue with the technical analysis of the markets, and as always we will start with the US dollar index. We have established last week 3 important bearish targets located at these points that you can see with the blue lines. Now, after the price had obtained a lot of liquidity due to this last downward movement, we can say that the dollar index has enough power to try to make a new upward movement. This upward movement can be just limited to try to make a lower high and after that make a new downward movement. And why I'm telling you this? Because the next movement can be something like this, a pullback from the price to try to reach a new lower high, as you can see here, and then try to continue this downward trend. So with this, we can say that the US dollar index can continue this downward trend that we can see in this structure that is clear. Taking this into consideration, we should establish bullish targets for this week. The first bullish targets based on the 50% of this last range, which is located from this point to this point, is 107.545. This first point of the cotization of the US dollar index should be the first barrier that the US dollar index will face before it can continue this upward movement. So this objective will be crucial to try to break if the US dollar index wants to continue its upward movement to try to recover an upward trend. But if the price after this we see some signs of weakness, then it will be a good opportunity to try to sell or to try to make a short with the US dollar index and try to have this kind of movement, a nice downward movement that we can trade. A second objective will be established here as the highest part of this range located at 108.523. The next targets will be considered as the last one we have considered the last week. 109.637 and 110.054. So for me, before trying to reach new bearish targets as the one that we have established at 105.420, the price should have an upward movement to any of these targets that we have established before. Now we continue with the SP 500. We saw a nice movement, nice downward movement to one of the targets that we have established last week, 6,012.61. After the price reached this bearish target, we saw that the price had a reaction, and after this, it started to make a strong upward movement, and it was close to make a new all-time high, but as we can see right now, the price wasn't able to make it. So we are seeing this graphic today on Monday 17, but you need to consider that if the price make a downward movement, there are several targets that you can consider for your trading. I will put the first one here where we can see this fair value gap, a clear fair value gap. It's consequent encroachment, the 50% of this fair value gap located at $6,100. We can establish another point, another target here at $6,065. And finally, another fair value gap. I like to establish fair value gaps with the SP 500 because there is always a high possibility from this asset to try to reach these fair value gaps and make a reaction. This last target is located at $6,034. And why we put these targets we do so because any of these points of the price of the SP 500 can make an upward reaction from this asset. Consider these points to try to make a new upward movement. On the other hand, if you are considering that the SP 500 can continue this upward movement, don't forget this target that we have here at 6,198 as one of the main targets before we can see a new pullback from the SP 500, a new correction. Now let's continue with the Euro USD. We are seeing a nice movement, a nice upward movement. Euro USD is recovering, and that's a good signal for the traders that like this asset. The big problem right now is the geopolitical tensions that are occurring because of all the consequences that can make the decisions of the President Donald Trump. Taking that into consideration and all the fundamentals we have saw in the first part of this analysis, we can say that the Euro USD made several points of liquidity, and we have several here. I will just signal them to you. Several points of liquidity that we call the internal range liquidity: 1.04472, 1.03730, 1.03173, 1.02921 and 1.02858. Several points from the price of the Euro USD that you can consider before having a good reaction from this asset. If the price falls and we don't see a reaction from any of these points, we can speculate that the next movement could be a new lower low, and that will be the worst scenario for the Euro USD, because if we break this point of the price 1.02109, there is a high possibility that we can continue seeing lower lows, trying to break the 1.01775 as the most important point of the bearish targets, and making a Euro USD with a high possibility to return to a support that is located at 0.95361. Finally, we will analyze Bitcoin. As you can see, this is a graphic that no one likes because we can't see a clear structure with Bitcoin. So if we don't have a clear structure, it will be difficult to make new trades with this asset. Considering this information and considering that we can make points of the price, we can establish some objectives, you need to understand that before we see a new strong movement, we need to break any of these points, any of these supports or resistances that we have with Bitcoin right now. If you just want two objectives, two targets, I think the first most important bullish target is located at $102,094, and the most important bearish target is located at $94,111. Before breaking any of these points of the price of Bitcoin, it's difficult to make new trades, because if you make new trades, if you make longs or make shorts, it's difficult for you to make good profits from this, because the price will just get back to the range and you won't get a good risk ratio with any of the trades you're trying to make. However, if you are trying to make new moves, new trades, I think the closest targets for the bullish traders will be $97,987, and for the bearish traders will be $95,811 as points that you can take into consideration to take profits, to put a stop loss, or to consider in your analysis. That concludes today's market analysis. The financial markets are constantly evolving, and staying ahead requires knowledge, strategy, and the right tools. If you found this analysis valuable, don't forget to like this video, subscribe to the channel, and hit the notification bell to stay updated with the latest insights. To elevate your trading experience, register now at xChief.com and access professional trading conditions with xChief. Thank you for watching, and I'll see you in the next analysis.